Okay, guys, we are now back and live in session. Today I'm going to be looking over more stock related information. I'm going to rock with my man Zip Trader here. You know what I'm saying? He released this.
Folks, you better get ready.
He released this 15 hours ago, like I was saying, and currently has around 33,000 views. So 15 hours is 30,000 views. I would say people keep up with this man. You know, he may seem very credible. You got 623 subscribers, and you know what I'm saying, I already got 1.7k likes. We'll go deeper into his channel, you know what I'm saying, read some more about him. Right here, he always says, you know, if, you know, you're taking the ultimate risk, make sure you're doing the ultimate frisk. I mean, it's a good saying, I like that.
Folks, you better get ready. In today's video, we're going to cover the latest on plays and where we are seeing massive opportunity. And then for the main entree, we're going to talk about one stock that is set to more than double from current prices by the end of 2024. This stock I actually think is a pretty obvious buy for people that are looking at the details underneath the surface. And we're going to get right into all of this and put the timestamps down below. But first, as always, if you're the one taking the risk, you got to be the one.
Hey, I ain't gonna cap though. I think Nike finna pop off next year. I think it's the perfect time to buy into it now. I think it's already starting to like go up, bro. But they've been doing a lot of stupid shit. I ain't gonna lie. They got some shit coming on Yachty, the concrete shit, and then they already got that shit Fortnite right now. So I'm calling it right now. Okay.
One doing the ultimate frisk. Folks, you better always think about your risky before you do your frisky, and vice versa. And that is good advice anywhere in life. And by the way, quick reminder, Black 75, our Black Friday sale on Zip Trader options is on, and it will expire at midnight Friday. So if you'd like access to our options alerts, our options chat room hosted on Discord, and our hours of step-by-step lessons, I'll go ahead and put the link down below. Again, 75% off with coupon code BLACK75, and that is indeed a one-time fee. Okay, so with that being said, let's go ahead and get started on plays here. We'll start with HIMS. So last week we made a video picking HIMS as one of our newest plays and explained why HIMS is one of just a few small to medium cap businesses that have such crazy growth that the stock could literally 10x in the coming years, and it would be justified. And so far since then, just in the week over week trend, we're up about 32%. We also alerted calls for options members, and those have done phenomenally well as well. We alerted HIMS calls in the evening at November 20th at about $6.11, and they ran to $10.50 at highs this morning. A run of about 71% alert price to highs. Pretty solid turnaround after just a few trading days, right? But the fact of the matter here is that the underlying business warrants this momentum. And that is what you got to look at when you're looking at any small cap right now. If you're going to buy something, well, the best thing to buy is something that's going up, but also warrants that momentum. And then snap it at a dip. Very rarely do you see a business that is doing these kinds of numbers that HIMS is doing year over year and then not see their stock continue their momentum. Now, that being said, these numbers are no excuse to chase. Yes, I see momentum heading into Q1 and beyond, but you got to be strategic. In terms of a strategy to play, you look at the chart. This is a stock with checked momentum. Yes, it's volatile, but you get higher and higher lows consistently. From a strategy perspective, a higher low is a time to buy, and a higher high is a time to take some profits off the table. If you believe something's in an overall uptrend, buy the higher lows and sell a little bit off each higher high. That way, if you're wrong, you risk manage that wrongness away. Okay, next, Mara, lovely Mara, our top Bitcoin miner. So Mara stock hit new cycle highs this morning at 28.89 despite Bitcoin having a pretty rough day. Now, here's the thing with Mara, and we talked about this yesterday, but Mara is in a big catch-up cycle. Why? Well, because hedge funds were shorting Mara and other miners to hedge their Bitcoin and MicroStrategy positions, and she's had insane amounts of shares dumped on her without any regards to the fundamentals of her business. And again, we talked about this in depth yesterday, but Mara is now repositioning herself to play the MicroStrategy game of offering 0% debt and then using that money to buy Bitcoin and moreover buy back earlier higher interest rate debt that hedge funds were using to hedge their positions. And this is causing what they said in their words is an unwind of hedges that must be done largely by buying shares. So Mara has a lot going for her right now outside of the fact that she is the largest and most successful crypto miner. Now, we alerted $20 Mara calls at $2.43-ish on September 16th. They ran up to $10.85 at highs today. And that is a run of about 346% alert price to highs. And that is the power power of options. Options allow you to really leverage moves. If you have a small account, options can be super duper effective. But in terms of the straight up shares, I mean, we just blew through the previous top at $26.66 and made a new high. But right now, what we're seeing is purely a catch-up trade because, look, Bitcoin went down today, right? So presumably, we are going to see more dump the next few days again, and then we'll see a new high maybe sometime after the Thanksgiving closure. Last time it dipped, it declared support at just under $18. This next time around, if it hits, say, $22 support, it could easily bounce back and hit 30, maybe even 32. This stock, in my view, is really a $40 to $50 stock based on Bitcoin's current valuation. But the key with this stock and being risk managed and level-headed is making sure to get it at a good deal. So again, if you're playing this to get a good deal and to have a risk managed position, you want to get it as it's dipping to support and showing signs of recovery. It dips to $22, you see it starting to bounce, all of a sudden that's the time to pounce. On top of that, Bitcoin right now is in a dip, at least as we film this video. However, again, dips are buying opportunities in Bitcoin and Bitcoin stocks. If you have an asset you like and you believe it's in a momentum cycle because of sound reasoning, well, if you get the dippy dippito, well, you can start positioning for the next rally-toe. Right now, the odds show Bitcoin hitting 100K in 2024, and we are heading for the most Bitcoin-friendly administration ever. So I believe any dip in Bitcoin or in Bitcoin miners is a really justified dip buy opportunity. Okay, next, SoFi. So SoFi is absolutely killing it now, hitting $16.18 at highs. And our alerted SoFi calls have now gone up a total of 442% alert price to highs. But what exactly is coming next for the FI of the SO? Well, folks, this is yet another stock that people look at and they say, oh man, it's going up too fast and the fundamentals, the underlying business can't possibly justify it. It's just not possible, Charlie. Well, you have to remember that this is a company that was unjustifiably and artificially beat down by current White House policies. Biden basically nuked the student loan space, which was SoFi's core business. With federal student loan payments paused and interest rates set to zero, borrowers had little incentive to refinance their loans through private lenders like SoFi. This situation led to a significant decline in SoFi's student loan refinancing business, which of course was one of its core and most profitable segments. In fact, SoFi even sued the Biden administration because what Biden was doing was costing them millions upon millions of dollars. But that is now behind us. SoFi figured out how to use this down period for it to diversify their business and continue growing their membership to levels that now are so extreme that as their business completely turns around, and as the student loan segment completely turns around with low interest rates and a change of administration, all of a sudden SoFi is headed to skyrocket, and that it's already doing. SoFi's business is going to be stronger and hotter than ever at the same time where everything is pointing in their favor. And likewise, I fully expect SoFi to break its all-time highs in the next few months, probably shortly after Trump takes office. So again, I get it. A lot of folks will say, oh man, this one too expensive. But folks, just look at the past. SoFi was trading much higher when we had student loan moratoriums and years of uncertainty ahead of us. Now we're heading into an environment where everything favors SoFi. Absolutely do not chase. I don't want to see anybody chasing. Absolutely, it is a terrible idea to chase. You always want to get a dip buy. But at the same time, sleeping on this one, if it gets back down to $14, $13 again on a dip, is a mistake. We made tons of videos on this at much lower levels, and you can go back and see the arguments I made back then that eventually all this student loan stuff was going to flip, and now it's flipping, and now we still have opportunity. Okay, next, Palantir. So our lovely Palantir this morning hit a high at 67.88, and our alerted Palantir calls have now officially gone from 564 to 2375, a run of about 321% alert price to highs. Pretty insane. But what's actually going on here? Charlito. Folks, you got to remember this is yet another stock that is playing catch up after years of being an underdog. And this is a $234 stock by 2023 based on my conservative growth estimates, which we've broken down in a previous video, and you should watch. But my growth estimates on Palantir, dating back years, have always been too conservative. And I do that specifically because I don't want people's hopes to go crazy. I want people to look at the stock. I want them to have a conservative idea of growth and conservative price targets, and then be pleasantly surprised when it exceeds them. So as I've said for years, look at Palantir as it is. A really booming business with a stock price that is incredibly volatile, that has tons of breathing opportunities, which are great for people that love to buy on dips, not so good for people that need that instant validation in their heart that the stock is just just going right to the moon. There's going to be plenty of breathing cycles before we get to that 234 price target. Okay, now it's time for the main entree today, the main stock, and that is UPST. Upstart. Now, we've talked about Upstart for years, and we called it out originally many years ago, and we reiterated it again and again during its down cycle that took place over the last few years. And like many of the other stocks that we talked about today, this stock has had a beautiful resurgence, but it is just playing catch up. Upstart is a company that has successfully proven that AI underwriting works, creating a major shift in how lenders approach risk assessment. This disruptive approach positions Upstart at the forefront of the trillion-dollar lending market, trillion-dollar plus actually. Instead of relying solely on outdated credit scores like FICO, Upstart's proprietary machine learning models evaluate over 1,600 variables to predict credit worthiness. This allows Upstart to approve more loans for borrowers who would otherwise be denied while maintaining default rates lower than traditional lenders. Now, take a second and zoom out on the chart. Upstart was at $401.49 at its last peaks. That was October 2021. And the shares outstanding at that point weren't much different than the shares outstanding today. So it's not like they diluted this into the ground. Was Upstart worth $401 back then? Probably not, unless you're willing to factor in many, many years of growth. But at today's pricing, we are still well below support levels that were considered crisis lows just a few short years ago. This is yet another stock that was beaten down because it was a growth stock and no other reason, not because of any justified business reason. And bigger picture in terms of thematic trends that we're seeing in today's market. Well, in this market, we are seeing stock after stock get rewarded for having a unique use case for AI, and this is one of the most proven ones, I would argue. And so I believe this is set to skyrocket substantially into 2025. I see this having an overall uptrend with, yes, shakeout periods, as always, dip buy opportunities, but an overall trend of higher and higher lows and higher highs that take this above 90, then above 160, then the 193 threshold. And don't be surprised if you see this at $200 plus in Q1 of 2025. Folks, I'm planning on showing a screen grab of this in a future video that I'm going to post in Q1 of 2025 when I believe Upstart will be around $200. And I'm going to say, look, I told you guys when this was in its 70s that there's a lot of upside here. Now, I'm not saying chase it. Remember, we never chase. But take a look at the price to sales ratio. The price to sales ratio of Upstart is 12.63. In 2021, it was 48.38. 12.63 is basically nothing compared to where it was in 2021. And more importantly, sales are about to skyrocket as lower interest rates and a Trump administration change the name of the game, which means this number is actually likely much lower than it appears considering that sales are about to skyrocket. So the amount that you're paying for every dollar of sales is actually a lot lower. But more importantly, even if all else was being considered equal, it skyrocketed to 48.38 the last time we were in a market condition that acknowledged small cap growth plays. Is it going to go up to that level again? Probably not. But could it get to 25 to 30 times sales on a much larger sales number? I think so. And that's why I am making an argument in this video for Upstart to absolutely blow through each of these previous support turned resistance levels. Now, what about those who hold Upstart calls that we've alerted? We've long believed in Upstart, and we alerted Upstart calls in this cycle at $7.78 on October 17th. They ran massively. These calls ran some 234% at highs to $28, and then Upstart had a big pullback cycle and these calls dumped, and now they're heading back towards their all-time highs again. What's my opinion on these now? Well, look, if you're in this from an early point, don't get greedy. Take some profits off the table, but also understand that, again, I see the stock breaking well into the hundreds and up to 200. So whether you're playing shares or the call options, there's a lot more opportunities for you. You just got to make sure that you're not being too greedy. You're taking some profit off the table at higher highs, and you're keeping your eye on the bigger picture. Anyways, folks, that caps off today's video. Make sure to take advantage of our coupon code BLACK75 on our Zip Trader Options program, and we will see you next time.
Or you're making some money?
All right. This actually might not be a bad video.
Folks, you better